Welcome to the fourth webcast of Schmalenbach Impulse. Schmalenbach Impulse stands for the combination of academic rigor and practical relevance, and for inspiration through active discourse. My name is James von Moltke. I'm president and CFO of Deutsche Bank. And I've had the privilege of serving on the board of the Schmalenbach-Gesellschaft for over 6 years now. And I'm excited to be part of this outstanding initiative that was launched 4 years ago. Face to Face is the name of the series in which today's webcast appears. Joining me today is Professor Dr. Brühl, Managing Director of the Center for Financial Studies and Professor for Banking and Finance at the Goethe-Universität in Frankfurt. We're both very pleased to contribute to the Schmalenbach Impulse series and with this panel discussion on the digital euro, exploring its impact on the financial sector as well as the opportunities and challenges it presents. Welcome, Professor Dr. Brühl, Volker. I'm excited to exchange views with you on the preliminary results of the digital euro project. Your in-depth analysis of the digital euro's design, structure, and challenges, which you published a few weeks ago, will be an essential part of our conversation.
Thanks for the invitation. It's great to be here at Deutsche Bank and to exchange views on this important topic.
Let's start with a focus on your paper. Could you provide an overview of your assessment of the digital euro project, including its key design features and its status?
Yes, we are currently in a phase where central bank digital currencies are being investigated around the world. For instance, a long time ago, China worked on it, the United States, the UK, and also Japan. And the digital euro work has started back in 2020, where the initial idea has been to introduce a digital alternative for physical cash, notes and coins, as digitization of the economy and our daily life moves forward. The idea is that we establish a digital currency which is trustworthy, efficient, innovative, and has the status of a legal tender so that everybody has to accept it like physical cash nowadays. However, there are certain obstacles that have to be overcome. One is that a digital euro would have to have a high adoption rate among retail customers in order to justify the huge investments in the infrastructure. It's quite a costly undertaking. And it is hard to see why today's retail customer should switch their payment habits from a variety of existing electronic payment solutions to a digital euro. So you need to convey a competitive advantage, which is not that easy. It could be the credibility of the euro system. It could be that you can use the digital euro online and offline and so forth. But empirical studies show that retail investors and retail customers usually change their payment habits quite slowly, if at all.
It's interesting that both the status of the discussion and then some of the impediments to moving forward, as you say, you know, a currency requires trust. It requires low friction costs for the users. It requires a degree of network effect, if you like, both the infrastructure, but acceptance with networks, merchants, that is,
yeah,
and others. And so these represent sort of important impediments or challenges that the digital euro needs to overcome. One of your earlier papers spoke to the growing dependency in the euro area, yeah, on non-European payment providers. So I guess one question about the digital euro project is, will it preserve or enhance monetary sovereignty? And does it provide sovereignty over the payment infrastructure? And then I guess the related question is what role the euro system should play in creating that infrastructure.
Yeah, I think the basic objective is to really make sure that the transmission of monetary policy decision is ensured in the digital age as well. So that is, I think, the primary objective. The second objective is to reduce the dependency from global payment infrastructure providers, which are mainly based in the United States, is a secondary objective. Whether that can really be achieved is still an open question because the infrastructure for the digital euro is quite complex, and the ECB has, launched different requests for proposals to infrastructure technology providers. And it turned out that the whole system cannot be generated by purely European players. For instance, we have a lot of, global technology firms that are doing that for quite some time, and that is not the case in Europe for obvious reasons. So I personally think that the digital autonomy in terms of infrastructure can be improved to a certain extent, but it will not be complete.
That's interesting, and that's there are many domains in which perfect sovereignty can't be achieved. The interdependencies in our economies are just too great. Although the political project of creating some additional sovereignty, as we've discussed, makes some sense. If I can turn now to the incentives in the system. So I think one of the design features that needs to be addressed is how do you create an incentive for the service providers to build the technology, build the infrastructure, build the networks on which the transactions take place. So how do you think the digital euro will ultimately address that, both for banks, but also payment service providers?
Yeah, I think we have two perspectives. One is from the user, which is a challenge also, because we know that payment habits change, if at all, only very slowly. But in order to make the digital euro work, you need a really scalable business model, and you need to have a lot of people being convinced to use it, at least to a certain extent. And the other thing is that the payment service providers and the banks who have to adjust the IT infrastructure need to have a viable business model as well. Otherwise, they wouldn't have any incentive to distribute and market the digital euro to their customer base. And that is something which is still up for discussion. I think there is, in the meantime, an overall agreement among political parties and stakeholders working on the digital euro that the compensation model for the financial sector has to be established. Otherwise, it will not work, because we have a couple of potentially negative impacts by a digital euro onto the profitability of the payment sector.
Mm-hmm. Your point is absolutely right. I mean, obviously, it's a self-interested thing to agree with for a bank that seeks to make a living on these payments. But one thing that people don't realize is that the cash economy represents a huge cost for providers of these services, whether it's the banks who have to move cash around, put them in ATMs, or it's the merchants who have to get the money back to the banks. And that there's a perception in the public world that's free, but it's not free. There's a cost attached to it. Yeah. And now, as we translate all that in the digital world, we've got to address that as well. I wanted to move to the next question, which is the legislative process. So this has been in discussion. The ECB has considered this project. The European Parliament has considered the project. Ultimately, I think we've made a lot of progress in framing what this will look like, but it will take a legislative act to bring it into existence.
Yeah. So there is a first draft regulation which has been published back in June 2023, proposed by the European Commission. But when you look at the legal documents, there are still a lot of holes that have to be filled. So it's end-to-end processes between, payers and payees, the role of the digital euro service providing system, the payment service providers, and so forth. And how does it all interact together, and who carries which type of responsibility? That is a huge undertaking, and it is supposed to be finalized by the end of this year. And that will then be the basis for a second draft proposal for the regulation.
Mm-hmm. Well, that's progress.
That's progress.
When would you expect it then to be introduced?
Well, that is very difficult to say. My personal estimate is that the digital euro will not be launched before 2028, because although the technological work on the digital system is quite advanced, but there are several legal questions that need to be solved. And as we all know, the legal procedure within the European community is quite complex and time consuming because of many stakeholders that need to be heard. And therefore, I think, including the marketing campaign, because what is also interesting is that the ECB launched a kind of customer survey on the digital euro. Less than 5% heard about the project, especially elderly people mentioned that, but also younger people who traditionally pay nowadays with a smartphone. They don't see any additional benefits. So there's a lot of education to be done in order to make that project work.
Well, thank you for sharing all that information and your expertise, Volker. I really appreciate it. And I have to say, your insights and perspectives do absolutely align with Deutsche Bank's views on the digital euro. We recognize that the digital euro could be a useful tool for achieving a couple of objectives, as you say, monetary policy objective, maintaining sort of confidence in the currency, the stability of the currency as it moves into the digital era. Nevertheless, we do think that there are some implications for both consumers and service providers as we move into digital payments. We also think there are use cases in the wholesale world that are potentially at least as meaningful for users, if not more so. We at Deutsche Bank, we believe that the retail digital euro should not be introduced as a standalone closed loop payment scheme. We sort of think it should be interoperable and so compatible with other private digital money, such as commercial bank money. And it should be integrated with the mainstream payment systems to ensure its success. To your point, then I think the consumer's familiarity with the payment systems won't require as much education or switching on the part of consumers. We also recognize that there's a dominance of a few payment service providers and infrastructure providers, and that therefore the private sector taking action to provide competitive alternatives, sort of building around the digital euro, can make sense and also support EU sovereignty in its payment systems. We would emphasize as well that private sector initiatives, such as the European Payments Initiative, known as EPI, or Bizum in Spain, can be leveraged in collaboration with the Digital Euro Service Platform, DESP, that's part of the proposed infrastructure to create that interoperability. We see relatively limited benefit of the digital euro in terms of promoting the international role of the euro. As you and I were discussing beforehand, international payments are unlikely to be made more efficient and effective through the retail digital euro. But we think there is an opportunity to leverage new technologies like the distributed ledger, especially again in wholesale digital euro use cases. Financial inclusion is another potential objective and an important political objective. And that should be put in the context of some of the infrastructure investments that are being made.
Well, James, what would you consider the key challenges and opportunities associated with the digital euro from Deutsche Bank's perspective? Have you identified any risks for financial stability?
We have, and there have been discussions sort of in various fora among the banks and between the banks and the people both on the political side and the ECB that are driving the process. First of all, as I mentioned, this interoperability. So our starting point is we need all to work together to create a payments infrastructure that's robust, that's safe, and sound. It protects things like personal data and also the sanctity of the money on that system. I think we agree with your point there. It should coexist, we think, alongside other schemes. So there are likely to be sort of use cases and features which the digital euro won't by itself do. And so I think that it can be designed to be interoperable from an infrastructure perspective and then sit alongside other payments forms in the systems. We think it fits with evolving consumer behavior. Consumers went from cash to cards and have now moved to payments typically in phone and other devices, and so the digital euro can help support that shift as well. Now, one important thing from a financial stability perspective, Volker, that you mentioned is what it would do to the liquidity of the banks.
Yeah.
So banks obviously fund themselves with retail deposits, at least in part. And there is a question, out there as to whether in sort of business as usual circumstances, and then particularly in a stress environment, would a digital euro create competition for banks that ultimately either reduce the overall funding base of the banks, reduce the amount of commercial bank money in the system, or create a potential sort of vulnerability for the banking system in a stress environment as people sort of shift money out of bank accounts around which there's some credit risk into the digital euro, where there wouldn't be, as much as it's a liability of the central bank. I think an important design feature of a euro CBDC needs to be that it's not remunerated in the way that, so if you're replacing cash on which you don't receive interest, you should also not receive interest on the CBDC. There are costs, as you point out, with that infrastructure, and so it needs to be created in the right way and with the right incentives.
Mm-hmm, mm-hmm. Very interesting. Given the growing global use of US dollar denominated stablecoins, how does Deutsche Bank view their role in the EU financial system, and are there geopolitical risks to be considered?
Potentially, yeah. Stablecoins, look, are certainly catching a wave right now. You've seen through the IPO of Circle in the United States and the USDC, I think it is, and then a euro stablecoin also issued by Stable. That it's beginning to sort of gain in attention, acceptance, and we're developing use cases, I think, through those technology provisions. I should mention that Deutsche Bank is also involved through a joint venture called All Unity, and was recently licensed by the BaFin as the first German provider of a euro stablecoin. So we're participating in this directly. And we're also participating in stablecoin creation with partners, and the stablecoin would essentially be a competitor to a central bank issued digital currency, potentially providing other use cases, potentially programmability, other features that the CBDC wouldn't be creating. Are there financial stability implications of that? Potentially. Let's start with, again, the deposit base of the bank. So there is a social and economic good that is created by bank deposits, in the sense that money is recycled into loans, and banks take risk intermediating between the depositor's money and borrower's money, and that's how money creation is ultimately done. So our system has grown used to the roles of banks in both risk-taking and financial intermediation and money creation. A stable coin changes that in a couple important ways. One is, because of the reserve requirements behind a stable coin, all of that money will go into what we call HQLA, principally government debt. And so there is a world where enough money is pulled out of the banks and goes into stable coins that provides a useful function insofar as it funds the government's activities, but would then diminish the function that banks have in providing credit to the private sector. So there's an experimental part of stable coins that could potentially impact financial stability and economic growth. Well, we've talked, in our conversations beforehand, we've talked a little bit about the cost of intermediation for the user. Maybe we can talk a little bit about that. My impression is that much of the costs, at least to the consumer, are very low, and therefore, there is a question of whether whether the retail digital currency will really provide much in the way of economic benefit to the user of that currency. What's your view there?
Well, the political objective is that at first glance, basic usage of the digital euro should be free of charge for the end consumer. So payments, ingoing, outgoing, having a digital euro account with your bank, etc., should not be charged directly to the consumer. On the other hand, of course, there has to be a viable business model for the payment services industry and the banking sector. So there will be certainly charges for merchants who then will find a way to recharge their customers, at least indirectly. And I fully agree that the efficiency in the payment sector, which we currently have, especially with the introduction of the instant payment regulation and PSD2 and PSD3 regulation, there's very little room for further efficiency gains. As you pointed out, programmability of the digital euro is not part of the launch phase. And that would be, in my view, a key potential advantage that you could provide in terms of a wholesale CBDC, that we allow for more innovative payment structures. And that is unfortunately so far not the case.
I think that's an important feature.
Yeah.
Your point about the infrastructure, again, extremely well made, and the need for an economic sort of benefit, and that it's hard to see where that economic benefit will be. Now, one can always have things in experimentation. You know, when you start something, you don't always see all of the use cases and benefits that might come out of it. But as you say, with the relative efficiency of the payment systems, especially in Europe, it's not always obvious what the incremental economic benefit will be to the user. When we were talking, one use case that's sort of interesting is international payments, and as your point was that a CBDC doesn't really change that. What I think could happen is that the banks or other payment service providers in wallets can reduce the friction or interchange cost between two different central bank or digital currencies. So that could help on foreign exchange transactions or retail payments in currencies outside the euro. That's a possibility, but again, it would take innovation post the introduction of the digital euro to create that opportunity.
Yeah, and also is an important precondition that the digital euro is structured in a way that it is compatible with international payment standards, which is of course part of the plan. But first pilot projects show that it is not that easy to really establish a cross-border CBDC solution, especially because other jurisdictions like the United States, like the UK and others, they are quite hesitant at the moment to really push their projects forward because they see also the disadvantages. So whether it is really a realistic scenario that the digital euro is not an isolated project remains to be seen, in my view.
So I want to go in on that. So what was it that changed? So the U.S., the Fed was never all that interested in a digital currency. The Bank of England looked at it and then stepped away. I think in a dialogue with the bank. And in China, they went quite a long way down the path. Do you know the reasons? What was behind the thinking?
According to my information, the basic reasons are that there is a lot of uncertainty with regard to implications for the stability of the banking sector, and also with regard to financial stability in terms of monetary policy. So from a research point of view, there are a lot of questions which have not been sufficiently answered yet. And when you really launch such a project, there are also a lot of scientists who warn the ECB not to be as speedy as possible, but to really wait and see until we have a sufficient level of comfort that we don't overlook anything serious. And when we talk as researchers to the Bank of England, they point out especially that point that we do not know enough about the implications in the day-to-day business. And if it is launched, it's basically too late.
I agree. And look, it's an experiment. It'll depend a little bit on the design of the CBDC and also the maximum balance in the CBDC. It'll depend on how much innovation the ecosystem creates. Interesting to see. But your point is one I totally agree with. An experiment to completely move capital away from commercial bank money could have some unintended effects on the economy, and we should go step by step in that experiment.
Yeah, I fully agree.
Well, Volker, I want to thank you very much for being with us today. I found the interest. First of all, the paper is excellent work. Appreciate that the CFS is investing time in looking at this and engaging with public sector and private sector participants. Appreciate your being with us and explaining all this to the Schmalenbach-Impulse audience and making clear sort of the experiment and some of the issues that the digital currency will create. We really appreciate it.
Thanks a lot from my side as well. It was a pleasure to be here at Deutsche Bank to exchange views on this interesting project with you. And thanks a lot for the invitation. And I'm looking forward to continue this discussion in the future if it is possible.